How does the re-election of President George W. Bush mean for you and your pocketbook, and how can you profit from it?
Joining us now to talk about possible financial opportunities and pitfalls from the Bush victory is Sam Stovall, Chief Investment Strategist at Standard & Poor's, and Douglas Flynn, Certified Financial Planner at Flynn, Zito Capital Management. All right, now, Sam, let's start with you first. We've talked about some of the sectors that might benefit under Bush, including defense, energy, big pharma. Would you recommend some of your clients jump into that right now?
Actually, we would take the opportunity to lighten up on some of these areas because of the relief rally. In particular, big pharma. Just because the election is now over doesn't mean that all of the problems that they're facing have gone away. They still are facing increased litigation and FDA scrutiny. They're facing very thin pipelines and drugs coming off patent. So in general, our feeling is you probably would like to take some profits, if you could, in this category.
Also, there's a big push by consumers to start getting drugs imported, get these cheaper drugs imported. Do you think that will happen?
Well, I think that was a very good campaign issue, but let's face it, you're looking at a minuscule portion of the overall drug business coming from Canada. Also, what major pharmaceutical is going to export more to Canada in order to have it then be imported at a lower price? I think the more that the baby boomers age, that we could have this become more of a governmental issue, and possibly we could end up seeing healthcare look a little bit more like a regulated utility.
So where should we put our money? What stocks?
Contrarily, our feeling is that energy has not seen the better days behind it, that there still are some good opportunities, primarily because the world is in a global economic expansion. So we're going to be seeing increases in the economies of 2.5% up to 6.5% around the world, and in order to fuel that economic growth, you're going to need energy.
So any particular energy stocks?
Well, in particular, we would look towards some of the upstream companies like Nabors Industries, Apache. We would also take a look, if you wanted to hedge your bet, and look at the large integrated companies such as ExxonMobil, which pays a nice 2.2% dividend yield.
Doug, let me ask you, would you be recommending people to get into the energy sector now that the Bush has been reelected? I mean, what's your advice there?
Well, when you take a look at energy as a percent of the S&P, it's still only about 6 or 7%. Healthcare is about 13% of the market. Financials are around 22%. So if you look at it, it's a very small percent relative to the rest of the market. So we do think now that you have a presidency that encourages that area, that might be a place to overweight. You can feel comfortable being overweighted by a few percentage points in that area for the time being, definitely.
When you're sitting at the kitchen table with this investor that is a client of yours who may have a modest portfolio, what kind of advice are you giving now, given the fact that the president has won re-election?
Well, one of the things that's become clearer is that if you wanted to have a little bit more in equities long term, now is a better time to do that. People are feeling more confident about that. One of the things that we've been trying to do is focus a little bit more on the dividend-paying stocks. Now that we know most likely that there'll continue to be a lower tax on those, that's a good sector to have, especially for people that want to build a little bit of equities, can move a little bit out of fixed income, but keep the income high by using the dividends.
Let me ask you, Sam, to read the tea leaves a little bit. We have a president now who's in his final term. He doesn't have to run for re-election now for the next 4 years. Is that going to embolden his policies, do you think, and create a stronger agenda that he wants to get through that might be reflected in the way the markets or business is affected?
Well, I think the markets feel that there's now increased credibility because of the fact that he did win the electoral vote, he did win the popular vote, and the Republicans increased their representation in both houses of Congress. But the budget deficit being so large really does hamstring him from the opportunity of increasing economic stimulus. Our feeling is, however, that reform is going to be the focus rather than recovery, and so reform to Social Security, to taxes, and to tort might be the primary issues.
Now, Sam, we've had a big run-up right now. Do you expect that we'll get that Santa Claus rally, that we'll get the fourth quarter rally as well?
Well, possibly we would. I would not be surprised also if we have a little digestion of the gains that we've experienced recently. And I would also advise investors not to get too carried away with this, because the only thing that the election did was resolve the election uncertainty. We still have record deficits both on the budgetary and on the trade side. We're still looking at rising interest rates, decelerating earnings, and a maturing bull market.
Okay, Sam Stovall, Doug Flynn, thanks very much for coming in and sharing your thoughts with us today.
Great to have you here.
Thank you.
Now, you should know that Sam Stovall has no affiliation or ownership in any of the companies he mentioned, though Standard & Poor's and other affiliates may offer services to some of the companies he talked about. And for more on the impact of President Bush's re-election, pick up the latest issue of BusinessWeek magazine.